Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now today we're going to be taking a look at a company that I actually have a personal connection to. It's based out of Kelowna, BC, and that's actually where I went to university and spent about 10 years of my life. So here's me in action on graduation day. And we're going to take a look at GTEC in a little bit more detail. Now, in addition to the personal connection here, GTEC was also the subject of Financial Education Jeremy's video yesterday. So for those of you who don't know, this is a big YouTuber in the financial stock kind of space. And he actually put out a very bullish recommendation on this stock that's caused the stock to jump up quite a bit here. So I wanted to take a look at this company for myself, do my own due diligence, and share with you guys what I found. Now, before we get into the video, please take a second to like and subscribe to the channel if you haven't already. And let me know in the comment section below if you agree with my analysis, if you're bullish on this company, and if you do currently hold shares. Now, without further ado, let's jump right in and talk about GTEC Holdings. Okay guys, that's right. Today we're going to be talking about another small cap MJ company. This one's particularly interesting to me. I've got kind of a personal connection to this company, and there's also a lot of coverage on the YouTube community about this company. Just actually came out yesterday from one of the channels that I follow pretty closely, and I actually really look up to the guy, Financial Education Jeremy, for those of you who aren't familiar with his channel. Now, we're going to talk about GTEC in more detail here, but I wanted to bring up the chart specifically. You can see at the time of recording here, it's 68 cents American. So it does trade on the OTC under ticker symbol GGTTF, but it also trades on the Canadian Venture under ticker symbol GTEC. So it depends which one you're looking at. We're going to look at the US listed version here. So we're talking about 68 cents a share. Now, if we look at a 6-month chart, you can see this one has actually run up substantially. So it was trading in the 10-cent range for a long time here. Over the past couple of years, it's really traded sideways and there's not been a lot of action. Now, a couple of weeks ago, it started leaking out that Financial Education Jeremy was getting involved in a small cap MJ company, and the GTEC name started to kind of leak in the community. So you really did start to see this one move in the last couple of weeks, and it's actually up about 6-fold from where it was. So keep that in mind as we go through the presentation. A lot of this action that we're talking about, they just had earnings as well, I think has already been priced in here. Not to say this is a bad buying opportunity, but I definitely can see this one spiking further as soon as the mainstream kind of catches on. Jeremy has about 700,000 followers on his account, and if you look at the market cap here, this one's under $100 million US. It's sitting just over 100 Canadian, and when he talks about companies like this that have such a small market cap, he really has the ability to move that share price. We saw this with Very Good Food Company as well. So knowing that that was going on, I kind of sat on the sidelines. I don't have any position in this company currently, and I'm waiting for a little bit of that hype to maybe calm down and the share price to pull back before I think about entering. Now, on a side note, Jeremy did release on his main channel last night an official video about GTEC. So the rumors were true. He had invested about $100,000. So I would expect this one to pop pretty nicely today. I don't know if that'll be sustained, but I definitely expect as all those viewers now start to see this play, people are going to move in and bid that price up. So in terms of what GTEC actually does, we've talked a lot about small cap MJ companies on this channel recently, and they've gotten a ton of interest. So I'm happy to keep producing these videos. This one is definitely a grower or producer side, and they really focus on the high-end, top-tier MJ product and flour. So they're really going for that premium experience and people who are really passionate, avid MJ users that want that top-level experience or feeling when they use the product. Now on their site, you can see their executive summary here. So where high end meets high demand, GTEC MJ Co. is an independently owned and operated producer in Kelowna, BC. So for those of you who don't know, I actually spent about 10 years of my life in Kelowna. I went to university there, as we saw in the open. So I've actually had a personal connection with some of the people involved with this company. We're dedicated to cultivating ultra premium MJ in purpose-built indoor facilities only, and bringing sought-after brands to market. Now we're going to talk about their brands, their business model, their financial results in a second here, but I think it's important to understand that this company intentionally is going for high-end, high-value product, and they're not competing on a mass scale or on a quantity basis. They're really looking at quality. Now, if you scroll down slightly, you can see while they're still looking at the high-end quality, they are participating in the recreational, medical, and B2B channels. So it's not like they've pigeonholed themselves into only one vertical, but they're definitely after the high end of each one of those channels. Now, if we look at a high-level company overview here, you can see they cultivate, market, and distribute high-end MJ products that consumers desire. They pursue the highest standards at every level, from our purpose-built facilities, which again we'll talk about here later in the presentation, cultivator selection, to final harvest and CPG-ready products. So certified products that are consistent and provide that top-notch experience. So in terms of company highlights, you can see it was founded in 2017, so a very young company, still not a huge proven track record, but the growth profile is definitely starting to ramp up. They're headquartered in Kelowna, BC, independently owned and operated. And we'll talk about the CEO's personal investment in this company, but he's got a lot of his own personal money and family money in the company, which is good to see. Strong leadership, and these guys have been around the block. They understand the industry. As mentioned, they participate in all different distribution channels. There's currently 39,000 square feet of licensed greenhouse space under cultivation, and they have a portfolio of products, all of which are highly sought after and achieve higher price per gram than a lot of the mainline competitors do. So before we get into their actual brands, I did want to briefly touch on their financial results. This just came out 2 days ago, so they reported all of F20 and Q4. There's a number of highlights in here, and Jeremy talks about a lot of these in his video as well. Now keep in mind, these revenue growth rates are phenomenal, but they're starting at a very low point. So we'll see, time will tell if these projections or growth rates continue at this pace, but as of right now, things are looking really good. So you can see here, revenue growth of nearly 270%, resulting in record revenues of $8.8 million for the year. And keep in mind, this is Canadian dollars here, this revenue. Increased production by 270%. So production and revenue rose in unison there, which is good to see. Substantial reduction in operating expenses. So this one was really something that caught my eye. They were able to cut their costs by 40% year over year, or just about $3 million. So for a company of this size, it either means they were spending way too much originally, or they've really taken a hard look at how they do business and made the conscious decision to minimize expenses at every corner, which I think is the case here, just knowing the CEO and his personal involvement here. Net income from operations was just under $300,000, again Canadian, compared to a net loss of $8.3 million in the prior year, so substantial change in the profile there. And EBITDA of negative $206,000, which is a 96% improvement from a nearly $6 million loss last year. So you can see here the company is really shifting gears and changing that profile in terms of their financials from 2019 to 2020. So we'll talk about this in more detail later in the presentation. We're going to go actually into their filing, but I did want to point out one other thing here. So you can see the actual recreational cannabis sales accounted for 79% of total sales compared to 4% in the prior year. So they're definitely shifting gears and going after that recreational market, which in Canada here is really expanding rapidly, but is virtually untouched in the States. And I think that is what's exciting here with this play, or really any MJ play. And the other one I wanted to point out was the cost of production. So they're now under $2 per gram. $1.96 compared to just over $2.60 last year. So they've actually improved their production costs by 25%, or 66 cents year over year. Now we're going to look at actually what they sell a gram for later in the presentation, but keep this number in mind. Their cost of production is $2 per gram. So I said in the opening I had a personal connection with this company. So Norton is the CEO, and this is a guy that I've actually met in person through a friend of a friend in Kelowna. So during my time out there, it's definitely a smaller city. This guy's a similar age to myself. He's also just recently had a kid, and we actually ended up running into each other a couple of times. So it's always cool to see when your business or your passion, YouTube, stuff like that, intermingles with your real life. And this was a great example. Valen's also, I have a personal connection. They're also based in Kelowna. So it's really cool for me to talk about companies like this. And then when you factor in that financial education, Jeremy's also talking about it. It's really kind of a melting or a mixing pot of all my different interests and experiences in life. So in terms of Norton himself, from a business standpoint, he's deployed over $100 million into North American MJ industry. He's very well connected with these groups, and he has a lot of track record and experience with the MJ subculture, the people involved, and the financing players that are really looking to build this industry out. He's also been an advisor to some of the bigger producers, so Kronos Group is one of those, and he's actually invested over $4 million of his own money to start this company up, plus a few $1,000,000 from his family, his parents, and his brother. So when people are willing to do that, considering the market cap of this company, you really got to think that they believe in what they're doing. And I think that's why they were able to cut those expenses so drastically year over year, is because he knows every dollar he spends or saves or invests really matters to himself, the company, and ultimately his family at the end of the day. So now that we've looked at the high-level financials, we've talked about GTEC as a company and Norton himself, I wanted to look at actually what separates or differentiates this company from the competitor. So we talked about them really going after that high-end premium product, but in terms of the strains they actually offer, they have 30 different strains, and a lot of these are very exotic or unique. And this is really interesting. We've talked about MJ as a product in the past being very similar to like a craft beer experience or high-end wine. People really want to go for these different experiences, flavor profiles, terpenes, and you can see some of these actually have over 30% THC, which is very high for this type of product and really gives users that effect that they're looking for. Now, as we scroll down, you can see everything here is hang dried and hand trimmed, so it's really done in a curated kind of craft sort of way compared to a mass scale or mass production type of operation. And we talked about their exclusive indoor grow opportunities, but you can see here the kind of quality that they put into their facilities and to cultivating these plants themselves. So they're all purpose built, and they all have advanced humidity, temperature, CO2, irrigation controlled environments. So you can really perfect, and the main thing is create a consistent product time after time so people come back over and over again and get that same experience. Now, based on that top tier cultivation and energy they've put into growing a quality product, they've actually assembled a very strong portfolio of brands that they offer in the market. So you can see here GTEC's brand portfolio is designed to resonate with those seeking top shelf MJ products. Our focus on superior quality and constant product innovation drives everything we do. And you'll see in a second here, they're actually able to charge a lot more per gram than other LPs because of this top level quality. So looking through their brand portfolio here, you can see they have Black Market, which is high THC strains for experienced consumers. So this is not entry level stuff. You wouldn't want to just go smoke this your first time out. This is for people who are really looking for that high end, high THC product. Then they have Tenzo, which is a balanced cannabis with diverse Zen-like strains, so a little bit more calm, kind of lifestyle type of brand, maybe not as intense as Black Market. They then have Green Tech, so this is their medical MJ designed to help with pain relief, and it was actually their flagship brand when they launched. They then have Cognizant, which I think is a really cool name and cool branding. This is designed for sophisticated consumers who again appreciate the high quality genetics and craft growing. So you're going to see that word craft a lot in this industry. That's really the niche that a lot of these companies are going for. Now, one note on this brand is not currently available. It's coming soon, but it is planned on their product roadmap. And then another one that's yet to be released is Tree Hugger, and this is going to be a line of organic cannabis products. So really going for those people who care about consuming an environmentally friendly product while they enjoy MJ. So next up is a little bit of a summary on their overall operation. So now that we've seen the different brand portfolios they have, I wanted to look at their various different grow facilities. So you can see there's 5 in total. 4 of them are currently complete. 3PL Ventures is the big one in Vernon, BC that just came online. So you can see this one here is 60,000 square feet, which is substantially bigger than any of their other facilities. This one alone has 6,000 kilogram per year production capacity, and that one was just completed recently. Now, they also have a Biofarm Corp in Kelowna, which is on hold. This will be an additional 20,000 square feet of growing capability. But all in all, currently, they have just under 120,000 square feet of indoor growing grow. Now, compared to a lot of other companies that we've analyzed, this is relatively small, but again, this company is not going for scale or quantity, it's really going for quality. And the other number I'll point out here is their projected capacity in terms of kilograms. So that's 1,000 grams of MJ production. So on an annual basis, they're currently producing about 3,800 kilograms. They're looking to get that up to 9,800 kilograms in 2021. Now, in terms of actual capacity that will be recognized by GTEC, that's going to be closer to 6,800. And that's because this 3PL facility is essentially a 50-50 partnership. So they actually only recognize 50% of their share of that production. So this is another number that I want to keep in mind for our calculations later on. We already learned that their cost of production is about $2 per gram. We're now learning that they're going to try and produce about 6,800 kilograms or 6.8 million grams of product in 2021. So we'll use those in our calculations in a second here. So this slide is a more detailed view of Q4 and fiscal 2020 results. You can see a lot of the same numbers as we saw in the initial slide there. Now, a couple ones I wanted to point out that maybe were new or different from that initial slide are these. So we saw production increased by 270%, and that actually gets them up to about 2,700 kilograms compared to 730 kilograms in 2019. So their high-end capacity right now is about 6,800. They're operating at about 2,700. So they're currently only using about 40% of their total capacity for F21. That's encouraging because it means that they have opportunity to grow and they could potentially keep growth rates very consistent to what they did last year without actually having to expand production. Now, the other number that's important here is you can see their average selling price increased by 43%, and they're now selling at $6.90 per gram on an overall weighted average. But in terms of recreational cannabis, which we saw is making up the lion's share of their sales this year, about 79%, they're now selling at close to $9 per gram, which includes this federal tax that the government's put in place here in Canada. Now, in fiscal 2019, their weighted average was about $4.81 per gram, so that's moved up substantially. However, their recreational cannabis was actually selling for $9.25 last year. So that has come down slightly, and that is a little bit concerning considering this is where a lot of their business is coming, and that's the real area of growth for this company. And a final point here, you can see in Q4 alone, their retail cannabis actually sold for $8.23 a gram. So not only did it drop year over year, but it's actually dropping throughout F20 as well. And Q4 was lower than the yearly average. Now, in a lot of my other videos, I've talked about my concern with producers, and this is exactly that. As more and more people come into this space, whether you're on the high end or the low end, there's a lot of pressure and there's really low barriers of entry. Once you get those licenses, a lot of people know how to set up these facilities and cultivate MJ product. So not saying that this is bad for the company, but it's definitely something they're going to need to look at. As more people come into the market, especially with federal US legalization, there's going to be more competition on the growers. And generally that means the price that they're able to realize per gram is going to go down, which is exactly what we're seeing here. Okay, so now we're going to get into some number crunching, and this is something a lot of people have been asking for me to do a little more in these videos. So I'm going to take you through my personal projections for this company and where I think the share price should be and could be in the next couple of years. So if we now take a look at these numbers, let's say they're selling on average for about $8 per gram. I know they're selling right now for about $8.67 on the recreational side. Overall, they're selling for about $7. This probably will balance out close to the $8 point, which is really what we saw in Q4 here as they move more into the recreational space. So if they're selling for $8 per gram, their costs of growing that is $2 per gram. That means they're profiting about $6 for every gram that they sell. Now, in the previous slide, we saw that their maximum capacity in 2021 is 6,800 kilograms. For those of you in the States, 1 kilogram is 1,000 grams. So that means they have the potential to produce 6.8 million grams in 2021. Now, if we multiply that 6.8 million grams out on a top line revenue stance, assuming $8 per gram, you're looking at about $54.4 million of revenue. If you strip out their actual costs to grow the product, which is at $2, which gets us down to the $6 per gram, you're looking at about $41 million after their cost of goods sold is taken out. Now, the next calculation I wanted to look at here is actually on the net income. So if you think, Last year, they did about $282,000 of net income on $8.8 million in gross revenue. So that works out to about 3.2% net income out of their total revenue. If we then take that same ratio and we look at the $54.4 million of top line revenue, that means in F21, if they're able to execute and fill up all of their capacity at that same 3.2% rate, they'd be looking at approximately $1.74 million in net income. Now, if we were to apply a 20% multiple to that, you'd be looking at about $35 million in terms of market cap. Now that's in comparison to their current market cap of about 120 million Canadian. So it definitely looks a little bit expensive. Now keep in mind some of these costs are fixed and they're not going to go up in proportion to their production. But overall, if we think that, hey, based on F21 production, we think that they could be in the range of about, say, $2 million in net income. You give a multiple of 20 on that, that's $40 million. They are trading at a pretty rich premium. And I think I would definitely want to see this come back closer to maybe the 60, 70, $80 million market cap range in order for me to get involved in this company. Now, I said a very similar thing in my Oxley video last week, and I did receive a lot of people that were kind of questioning my valuation. Again, I'm not trying to say these companies aren't a good investment. All I'm saying is I think they've received a lot of attention, and I think a lot of this growth has already been priced in, and people are really expecting them to execute perfectly moving forward. And keep in mind, this company has only been around since 2017. They have an excellent track record so far. All chances are they will continue to have a great track record, but it is definitely a more speculative play, and it is a small cap company, so you need to be aware. And because of that risk, I really want to ensure that the price I'm paying is fair, and that really limits my downside potential. Now, in the opening, I mentioned that Financial Education Jeremy had recently released a video on this stock as well. So this actually came out yesterday, March 4th, and this is really the wild card here. So regardless of actual valuation, earnings, revenue projections, things like that, people in the YouTube community really follow big accounts like this. You can see here Financial Education Jeremy has over 660,000 viewers. And he strongly endorsed this company. He's bought over $100,000. He's up handsomely on his position already. And I do expect this catalyst to really bounce share price. So regardless of my personal opinion and my valuation or projection on this company, him going out and saying this is a 10x stock opportunity really does carry a lot of weight. And I expect a lot of people to jump in regardless of the share price, just to kind of capitalize on his recommendation and take advantage of this move. So again, I think this is great. He did an awesome analysis of the company. He's obviously a smart guy, which speaks volumes for GTEC overall. However, I would probably wait for some of this hype to blow over, some of this excitement to pass, and then try and get in, like I said, maybe in those low 60s. So that's it for today's video, you guys. As mentioned, this was a really exciting video for me. I have a personal connection with this company. I really look up to Financial Education Jeremy. A lot of the stocks that I review and hold in my portfolio were actually ideas that I got from him. I generally agree with his train of thought and his valuation on a lot of companies. This one I feel like has got a little bit ahead of itself, but it's definitely going to be on my watch list, and I'm definitely bullish on this sector overall. Now, if you haven't already, please take a second to like this video, subscribe to the channel if you haven't already, and have a great rest of your day.